China has set a relatively strong growth target for economic expansion this year as it continues to lead the global recovery from the COVID-19 pandemic. The country's annual parliamentary meetings kicked off on Thursday and Premier Li Keqiang delivered an economic forecast of more than 6% GDP growth for 2021. Joel Flynn has more from Hong Kong.
The pomp and circumstance is familiar, the challenges are not. China's parliamentary meetings have kicked off this year with big questions about its economy. Its recovery from the coronavirus pandemic has been among the best in the world, but worries have persisted about what's in store in 2021.
China's development this year still faces many risks and challenges, but the fundamentals of the long-term economic improvement have not changed. We must strengthen our confidence, overcome difficulties, consolidate the foundation for restorative growth, and strive to maintain sustained and healthy economic and social development.
The government expects GDP to grow more than 6% this year, up from 2.3% in 2020. But that's still significantly below analyst predictions that growth could beat 8% in 2021. Some analysts say the government is deliberately underplaying the economy's growth potential so it can trumpet an overachievement in a year's time.
Giving a lower GDP growth target, the government will feel less pressure in terms of giving more broad-based stimulus. Instead, they can be more targeted in terms of giving credit and fiscal support.
Some analysts say China's other goals may give a better idea of how it's measuring economic success. The government's planning more than 11 million new jobs for urban areas and unemployment of 5.5%. Those numbers are still conservative compared to previous years. It's also aiming for 3% inflation, which may not be easy because of stimulus measures at home and abroad.
A primary risk this year is still policy tightening, too fast policy tightening. Although from the government work report, we can see that Beijing is still stressing the point that stressing the importance of stabilizing growth.
China's also hoping for steady growth in trade volume, which could yet prove tricky. Tensions with the US remain despite a new administration in the White House. Trump-era tariffs are currently still in place on about $335 billion worth of Chinese goods. China's international relations are likely to be further strained by issues like Hong Kong, especially as the parliamentary session this year is due to approve further changes to the electoral system here. Investors initially appeared concerned about the conservative nature of this year's goals. Stocks in Shanghai and Hong Kong fell in early trade, regaining some of that ground later in the day. But for China's government, balancing risk and reward is a longer-term strategy. Joel Flynn for TRT World in Hong Kong.